What is going on? My name is Ron Abiera with Abiera Team Real Estate, and this is going to be your real estate market update for June 2022. So you guys have probably already heard that the market is shifting, and it actually is. So you've probably seen more for sale signs throughout town, more open houses. There was a time when even to get to an open house, you'd have to wait in line. You're definitely not seeing that as much. So definitely the market is shifting. Inventory is growing. I'll get into all of that. And I'll talk about pricing as well, because that might shock you as well. So what I'm gonna do different from what I've done in the past, I'm actually gonna look at numbers specifically for the city of Irvine. And so it's a large enough sample size to kind of make sense of what's happening in this market. And it's very similar to what's going on in Orange County. So I know a lot of you are in different cities. So if you want to know specifically more about your city, whether it be in Orange County or anywhere in Southern California, and even Las Vegas, just reach out to me. You know, call, text, email. My info is right here on the screen, and I'll definitely hook you up with some data specific to your home. Let me jump right into what the data means. So what I like to do is I like to look at sort of the leading indicators on where the market's going, because a lot of times we get data that is in the past. And so here we are in June. We're going to be looking at numbers from May, and that means these are homes that closed in March, April. So, oops, that was actually a long time ago. That was all before the rates started to increase. A lot of older data, so I like to look at what's about to come in the future. So what I've also done is, instead of looking at year over year changes, that's very common in our industry. People like to look at what happened year over year. A year ago, that was a totally different time. It was a different world, wouldn't you agree? Back then, I could put a home in the MLS, hit enter, and in 5 minutes, I'll have a dozen text messages of people telling me that they want to buy the home cash. Those days are not here anymore. It's definitely shifted. So I'm going to look at City of Irvine, and I've narrowed down the window to January. So I want to see what has changed, because a lot has changed within the last few months. So I'm going to look at the change from January till now. And the first thing I'm going to talk about are going to be new listings. So within the last 30 days, how many homes came onto the market is up 37% from January. It's kind of expected. More homes are going to hit the market. We started off the year at very, very low inventory. The second thing I'm going to look at is the demand. So this is the amount of homes that went under contract in the last 30 days. And compared to January, we're up 23%. So kind of natural. More homes on the market. We should expect more homes to get into contract. And the next thing I want to look at is the supply. So in the past, we would always talk about the months of supply, but lately we're talking about weeks of supply. So we started off the year at about 3 weeks of inventory in all of Irvine. We've jumped up about 150%. We're about a month and a half worth of inventory. So we've definitely spiked up in the amount of homes that came onto the market. And finally, we'll talk about the market time. So the market time is the amount of days that it took a home to get onto the market and to get into escrow. So right now we're about 17% less than from the beginning of the year, but it's still super fast. We're talking 15 days to get a well-priced home into contract here in Irvine. I want to look at some of the factors that sort of play a role in how the market has shifted outside of the data that I just gave you. One is going to be the interest rate. So according to Freddie Mac, right now at the time of this recording, the interest rate is about 5.25. So it was last month where we saw this huge spike that we have not seen before, where the rates jumped so quickly and so high. And right now we're still hovering right around that 5.25 range. And so what this means is that this affects affordability, right? And sort of the word on the street when it comes to the mortgage side of things is that the rates are supposed to increase all the way up through the end of the year. So this is kind of a big deal. As the rates increase, it changes affordability. So in real numbers, you know, that could mean the difference between, you know, $700 to $1,000 a month, depending on what price point we're talking about. And in places like Irvine, that could mean the difference between a 4-bedroom and a 3-bedroom. A 3-bedroom and a 2-bedroom. So rates are going to be really, really important to watch moving forward. The next thing that I want to talk about is going to be the demand. So the demand is the rate of homes that are going into contract. So if we have the rate of homes that are coming onto the market growing and the demand isn't keeping up, that's creating that surplus of inventory. So we've got to pay attention to that, and that's why inventory is increasing here. The next thing that I'm going to talk about is going to be the availability of homes. So just raw numbers at the beginning of the year, we were about 180 homes for sale, which was a record for the beginning of the year, a record low here in Irvine. And now, 5 months later, we're looking at about 360. So we've doubled the amount of available homes for people to purchase within a 5-month period. So it's super fast, but it's all relative. We got to, again, keep in mind that we're starting very, very low and we're on a path towards some type of normalcy. We're gonna expect a really, really quick jump. And so we're sort of on that path when it comes to availability. The last thing I wanna talk about is also, I do wanna mention values. So not much has changed here. So it's broken down by attached homes. So these are typically your condos and townhomes. In Irvine, the median value is about $1 million. And it's pretty much what it was in January. So we haven't seen an increase or a decrease in pricing when it comes to the attached products. The detached products, detached homes, the median price at the beginning of the year was 1.7 million, and now we're at 1.65 million. So that's about a 3% change. I think that sample size is really small to see if there's going to be a significant change in pricing. Right now, it doesn't look like it. But then again, it's only been a few months. I think, especially when it comes to rates, I want to see what happens with the data that we get in June and July, because now we're going to talk about purchases and sales that are happening with the new interest rates. So it's going to be interesting to see what happens to values at that point. So after giving you all this data, here are my takeaways. One is going to be paying attention to the interest rates. So right now we're again hovering at that 5.25. If rates do increase significantly, that's obviously going to affect affordability and values. So we've got to pay attention on what's happening. And so I'm really interested to see what's going to happen in the next couple of months to see what that data tells us about how rates have affected us so far. Second thing is that it is still a seller's market. So yes, there's been a quick shift in the market, but relatively speaking, it's still a seller's market. Right now, it's sitting at 1.5 months of inventory. That's still super low. A seller's market's considered anything under 3 months. So we're not even close to 3 months yet. And once we get between 3 to 6 months, that's sort of the balanced market, and we're not close to that yet. So relatively speaking, as much as things may be changing, we're still considered a seller's market. The next thing is that market time is going to shift. Definitely count on that. So right now, the data that we had were homes that sold that let us know what the market time was. So right now, 15 days. That's incredibly fast, right? But when I'm looking at the inventory, homes that haven't gone into contract yet in Irvine, I'm seeing homes that are on the market for 30, 60 days. So that data won't be relevant until it actually goes into escrow and closes. And I think we should expect that shift in the market time. Things are not going to be selling in 2 weeks when we see homes on the market for 30, 60 days. So definitely pay attention to that. And that kind of leads into the pricing as well. Pricing is already shifting. And I want you to take a look at this graphic that I pulled up here. So I pulled up right now, real time, all of the homes that are available for sale in Irvine. And if you take a look at all the red arrows, those red arrows indicate that owners are adjusting their prices. 3-4 months ago, there couldn't be a red arrow to be found. And now homes are sitting on the market and people are adjusting their prices. So there's definitely a shift happening with pricing. And I do want to be very clear that I'm talking about pricing, not values. So, here was the pricing strategy that people had within the last few months, is that your neighbor's house over there closed for $1 million. I'm going to put my home on the market for 1.1 million. Why? Because I can. There's no other homes that I'm competing with. It has nothing to do with the condition of the property, the location. They're similar within the same neighborhood, but I can ask for more. And crazy enough, people are willing to pay that price, if not more. So that was a pricing strategy in the past. We already have data showing that sellers are adjusting their prices. Buyers are not putting in offers on homes that are overpriced. Definitely pay attention to pricing. So to wrap it up, for buyers, if you have any thoughts about buying, my advice to you is definitely start off with getting with your lender. If you were out of the market and now you're trying to get back into the market, talk to your lender, find out how these changes in the interest rates have affected your purchase power. because that may or may not have significantly changed. And if it has, that's going to sort of adjust your parameters on what you're searching for. And also to the buyers, it's still a seller's market. So any of the well-priced, well-conditioned homes are going to move quickly. So you'll still see multiple offers on those type of homes. So you still have to be very aggressive if you're a buyer in this market. And to any potential sellers out there, it's still a seller's market, but definitely pay attention to your pricing strategy. If you're going to hire somebody to help you out with that, make sure they have a plan. Marketing does matter. It's shifted already. We can already see all those red arrows. You don't want to be in that position where you start too high, start to lower your price, and then that sort of changes the perspective from a potential buyer looking at your property when they notice that you started too high and you're already lowering the price. So definitely pay attention to how you price your home. So most of my friends out there watching, I know most of you guys don't have any plans to move. However, if you do run across friends, family, coworkers that have any thoughts about moving, definitely do me a favor, keep me in mind. Call, text, email. My information is right here on the screen, and I'd love to have out your friends. So that's your market update for June 2022. I hope you guys got some value out of this. Thanks for watching, and I'll see you on the next one.